Hello everyone and welcome back to the channel. Guys, after many requests in our Discord group, I am going to explain to all of you why do I think naked put options, including cash secure puts, it is one of the best strategies we can use when it comes to trading derivatives. Of course, I'm going to explain to you guys a couple of things that you must take in consideration, because remember, naked put, you are trading without the cash behind if you were to get a sign. Because when you trade cash secure put option, for example, if we do get a sign on $100 stock, we need to have, let's say, 10K in margin in our cash account, of course, to cover the assignment. But in this case here, we're going to trade naked. You can trade naked options using margin or even without a margin account. But of course, if the stock do sell off, if you don't know how to manage those trades, if you eventually get a sign, guess what? You're going to get your trades closed by the broker. Okay, so trading naked option, for those of you that never trade options before, it's not recommended. The best thing to do is, guys, come here to our channel and you can go through this playlist here where you can learn how to trade options profitably. Okay, and of course I will be adding more contents to this course so you guys can pretty much improve yourself on a monthly basis. I'm not sure if this thing is gonna be add every single month here, the contents, but I'll do my best to put more contents here pretty much every single month. But nevertheless, if you also go to our channel, we got plenty, guys, plenty of contents so you can learn how to trade options for free without spending one single dollar. Okay, but back to the presentation. So in this case here, we are going to use the cash secure put option because if we're going to buy stocks, it is the best thing we can do. And I'm going to explain to you guys why. Because the price goes up, thank you very much. Trade sideways, thank you very much. The price goes down, that'll be our best case scenario. Okay, let's get going. And as I said before, we are going to earn cash without buying the stock. How? Trading naked put. Okay, and of course, for those of you that are a little bit more advanced when it comes to cash secure put option, if you do get a sign, you can turn this thing here into a cash secure put option as well. Very easy. And with short puts, you are paying pretty much for promise to buy stock at a discount price if the price drops. But like I said before, if it doesn't, guess what? We're gonna keep the cash, we're gonna keep the profit, and we're going pretty much to reestablish that position. What I'm trying to say is, if the price go down here to our strike price, thank you very much, we're gonna get a sign, we do whatever we want to do. We're gonna try convert this into something else, like to a cover triangle, or we can just hold the shares. But there's plenty of things we can do. And of course, why make trading complicated when selling short puts mean collecting pretty much on a regular base income without minimal effort? And for this, for those of you that have, let's say, for example, a 9-to-5 job, it is, guys, one of the best strategy. Why? Because you can pretty much set and forget. I always say to you guys, forget about this thing on YouTube, 9-to-5 is a scam. It's not. Especially for those of you that have great careers, earn great income. If you can combine your career with investing, is the best thing you can ever do. Why? Because you can make money investing, you can also keep popping up your portfolio with your income. It can be your main career, it can be your side hustle, it doesn't matter. It can be even a side business, it doesn't matter. Because the thing is, guys, you hear every time on YouTube, 9-to-5 is a scam. No, it's not. Absolutely not. There's a lot of people that make fortune from 9-to-5, bring the money to the market to pretty much protect their wealth or maybe multiply that wealth. Because like I always say, the stock market, it's not a place to make money, but rather to multiplicate our wealth and to preserve our capital. That's the best thing you can do with the stock market. And of course, most of the time, we're gonna be paid a promise that we're never going to keep. Of course, we're gonna keep the cash flow and we're not going to buy the stock. So although we're going to promise to buy the stock, if we do get a sign, guess what? We don't gonna get let's say forced to buy the stock. Why? Because we're gonna do trade management. And again, come here to our channel and watch this video here, guys. Let me see if I can find here, which you're gonna learn how to unassign yourself if you do get a sign for whatever strategy you might use. Here we go. Short put assign. do this now. In this video, I explain to you guys how you're going to get unassigned if you do get assigned on your cash secure put options. Very crucial that you do understand, okay? So watch the video there after you finish this one here, because cash secure put, you can get assigned anytime. The trade can go in the money, and for those short puts that's going to be deep in the money, what I'm trying to say here is, for those of you that doesn't have a clue what I'm talking about, if we sell here stock trading at 100, if we sell here at $90 strike price, if this thing dropped to $70, we're going to be $20 in the money. It's pretty much deep in the money. We are going to get assigned, no question asked. So you need to understand how to unassign yourself, and that's the video you need to go and watch combined with this one here, because in terms of trade management, that one is also a really nice content that you must grasp and understand. And like I said before, the short put is basically we're gonna sell here one short put options, and that's it. And for that, we are going to collect a premium, and for that premium, we're going to make some promise to buy the stock at a lower price, but it's not always is going to happen. Like I explained to you guys before, we're going to manage the trades instead, okay? So for example, let's say XYZ, let's use XYZ here. It goes up, it goes down, it goes up, it goes down, then trading at 150. Then you say to yourself, should I buy XYZ at 150 at the price, at the market price? Absolutely not. Absolutely not. Never, ever, ever. We're going to trade derivatives to buy the stock at a cheaper price. You're going to go to the option chain. You're going to find a strike price, let's say at $130. Okay, $20 below the current stock market stock price, which it is 150. And for this, we are going to receive here, let's say $2 to be forced, in other words, to take the obligation to buy XYZ at 130 if XYZ trade below 130 at whatever DTE might be. It can be 20 days, it can be 60 days, it can be 10 days. Whatever time in the future, if the stock do drop below 130, we are going to buy the stock. So in a nutshell, this is what it is, the naked put, okay? But also going to show it you guys in a platform how we're going to use there as well using TastyWorks, all right? But in this case here, let's say, for example, that, let me delete this thing here. Let's say the XYZ is trading at $40 because I'm going to show you guys the trade management. And then we're going to sell here at $35 strike price. And for this, we're going to collect here, let's say 60 cents in premium, okay? Let's see what happened in the next slides. So in this case here, let's say, for example, after 30 days, okay, XYZ did something, went down, up, went sideways, or went down. Let's see the outcome. So in this case, we receive $60. Remember, because we receive 60 cents, we have to multiply that by 100. So in other words, we receive $6 in premium to sell the put option to buy XYZ at whatever time in the future if XYZ trade below $35, okay? And the advantage is if XYZ stays above $35, the put option expire worthless. And of course, we are going to keep the $6 anyway. We always keep the premium anyway. But when people say you keep the premium, it means the stock, the option expire out of the money. Because if it is in the money, you're going to be losing some money on the option, despite the fact that we did collect $60 anyway. So in this scenario, it's ideally. Why? Because XYZ stayed above $35, all right? This is the best case scenario. Why? Because the expiration date is going to be out of the money. We're going to close this trade and we're going to move on to another ticker. Let's say XYT, whatever it is. So you're going from Amazon to Facebook to Meta and so on. And of course, another way to explain this, which a lot of people use, which is right, okay? It's pretty much owning like an insurance company, right? Because in the previous example that we just showed you, we pretty much sold our insurance here at $35, okay, for a product that was trading at 40. So basically, we told the buyer of this option, or she or he, whatever it might be, that in certain days, if this thing here crash, or if this house fall apart, if this car has a crash, or if whatever kind of insurance you can think about, we are going to pay $35 for them. Even if it's worth zero in, let's say, 30 days, we must to pay $35, and that's why our loss here, it is 35 times 100, which it is minus $3,500. Why? because it's 35 per share. We always multiply by 100. That's why our maximum loss here, it is $3,500. This is us selling insurance. But if you guys realized, we never own the stocks. Never, ever, ever. We sell insurance for the stock, whatever stock might be. It can be ETF, index, futures, commodities, without owning the product. And that's the main thing when it comes to trade naked put / between quotes cash secure put options. And now just let's break down that trade, for example. Okay, so that trade that we just did, we collect 60 cents. Okay, so in other words, we made $6 on that trade. In terms of breaking even, the break even of a cash secure put, guys, is very easy. It's your strike price, which is your K, minus your premium. Our strike price was 35 minus 0.60, which it is our premium. So our break even here is 34.4 per share. Like I said to you guys, our loss, our maximum loss is 35 times 100, which is 3,500. But we need to subtract the $6 that we did receive. So our maximum loss, it is $3,440. But of course, if XYZ were to drop to zero, okay, our loss would be the whole thing. But if XYZ goes from, let's say, 35, when you open the trade, go past our 34 all the way down here and trade down at 20, we can manage this trade. We can keep it managed. There's plenty of things we can do. You can even close the trade for a loss and move on. That's fine. If it is your exit strategy, there's nothing wrong with that. But we only going to suffer the maximum loss if it goes down to zero. Simple. And that's why I always say to all of you in this channel, beginner traders, especially when it comes to options, stick with the ETFs, stick with the index, and mainly learn how to trade futures, especially for those of you that have a smaller trading account. And when it comes to trading futures, you can also come here to our channel and, guys, watch this video here, which it is my takes when it comes to trading futures. What do I think? Why this is a really good thing to learn when it comes to trading futures? And also I compare here I think it was the ES against the SPY. And you're gonna see how powerful it is in terms of margin, how the futures can help you guys with a smaller trading account to trade instead of using, let's say, ETFs. But there's nothing wrong with ETFs either. Okay, it is a viable strategy. And like I said, running the casino for us is the best thing we can do. Why? Because we can put the odds in our favors. And that's pretty much, guys, what Warren Buffett does, all those big institutions does. What they do is they get into derivatives first, okay, to buy the stocks at cheaper price. Because this case here, if you're holding here shares for 10 years, there's a lot of shares that for the past 10 years went up 50%, 60%, down 40, down 30, and guess what? It's still at the same price. I can name it for you guys hundreds of shares, stocks, companies that hasn't gone anywhere for the last 10 years. But the people like myself that trade options, we pretty much got our account here, let's say from 10Ks all the way up to 50Ks in 5-6 years. Why? Because we still make money regardless if the price goes up, trade sideways, and go down. And that's the power of naked put option and cash secure put option. And for us to lose, we must have a significantly drop on the product. But if the SPY, if you stick with the SPY, whatever ETF it is, goes down to zero, like I always say, we're going to have way more things to worry about than actually our trades. Okay, for the SPYs to go to zero, I tell you what, you're never gonna bother about any kind of trading whatsoever. We probably wouldn't be here in this world, so you guys can have an idea, okay? And of course, buying stock cheaper price, it is, guys, another great alternative. Like I just explained to you guys, get into shares using derivatives, because the thing is, don't forget, okay, don't forget, if we do get a sign here at 35, this is your 35, your break even is 34.4. If it drops to 20, you can still sell here another naked options. Okay, and if you do get a sign at 20, which it is your second base cost, plus 34, it's 54. How much your break even is 27. So basically, you went from a break even of 34 down to 27. Why? Because you just trade here another naked option when the stock went from 35 to 20. You can still do your DCA, and there's plenty of things you can do, but you must learn how to enter, how to close, and how to manage your trades, because that's the only reason Only reason option traders make money, because anyone can press the trigger, but not many people knows how to manage the trade. And knowing how to manage your trades is the main thing, because every single trade, not every single one, but most of them, guys, will have in one shape or form of another some kind of issue with that trade that you need to learn how to deal with that. Okay, very, very crucial. And of course, we can use derivatives to us to balance and our profits and protection in terms of our portfolio. And naked put option and cash secure puts, you're gonna have roughly 74 all the way to 85% pop. Okay, this is our pop or PS, probability of success or probability of profits. You can call whatever you like. In this case here, our POS, very, very high. But don't get fooled for this. When you see someone online earn 85% of your trades, earn 9% of your trades, earn 95% of your trades, guys, run to the hills. It's just BS. You can still making, let's say, 95% winners of your trades and still losing money. Because like we always say, if you eat like a bird and if you shit like an elephant, you're going to still lose money. You can win 9 trades out of 10. Okay, win 9, lose 1. You can still lose money. You can win 1, you can lose 9, okay, 9, sorry, and you can still make money. So risk to reward, it's very important. Although when it comes to cash secure puts, naked puts, okay, risk to reward is not the best. And this is when it comes your trade management, because the risk to reward of a cash secure put, or in general, an option seller, it is, guys, how to manage the trades. Okay, because we do accept here to have, let's say, a 1 to 5 risk to reward. Okay, but this 5 here, what we're going to do is, are we going to take loss? Absolutely not. Are we going to take loss on these 9 trades? Absolutely not. We're going to manage them from 1 to 5. 4 trades, we're going to end up, let's say, making a little small winner. 1 trade is going to be pretty much break even. Or let's say, for example, 3 trades, we're going to turn up to be a winner after trade management. 1 trade is going to be a scratch. And 1 trade is going to be, let's say, a break even. And we still have here our winner. This is when you make money selling options. You do not make money selling options from the winners. You make money selling options from your trade management, turning losses into winners with a proper position size. I'm not talking about here, guys, throwing good money into bad money, doubling down every single time. Because if you double it down, let's say on GME AMC, you should lose your house by now, so you can have an idea, okay? Talk about trade management on index, futures, ETFs, and things like that. And sometimes in some blue chip stocks, but very, very rare that we're going to do that, okay? Just to recap, in my point of view, guys, it is one of the best strategies you can use. As long as you follow these 3 things here: risk management, like I always say, position size, being patient, and knowing how to manage your trades. Cash secure put, what else? Naked puts, all this kind of strategy when it comes to selling options can be the best thing to earn income. It is true. It is one of the best strategies ever, one of the best products we have to make money, but you need to learn these 4 things here. And we got all these things in our channel. You can go and learn for free, because I want to make sure you guys get everything that you need on your toolbox from my channel. You can jump to way more advanced channels, or you can advance yourself with real trading experience. But of course, do not eat like a bird and do not shit like an elephant, because you're going to lose money. If you win $1, $2, $3, $5, $10, and if you lose 100, guys, it doesn't gonna work. Okay? We option sellers, we make money from trade management. But in a nutshell, this is, guys, the naked put option. Now, let's jump to my trading platform, and I'm gonna show you guys an example of opening a naked put option. And of course, we're going to use, as usual, IWM, which for me, guys, it is the best ETF to trade options. Why? Because if you look at the chart of IWM for the past few years, it's like this. If you know how to capture these volatilities here, guys, you can make a lot of money. Because the thing is, if the price goes up, cash out, close your trades. If the price keeps going down, this here is the way to go. Can IWM goes to 0? if something out of this world happen, which I don't think it's real anyway, okay? So as usual, the first thing you guys need to do is pick your DTE. In this case, you're gonna pick here 47 DTE. Anything between 45 and 60, or maybe 30 to 60. It is a good DTE for us to capitalize on that time decay, okay? Once you open here the option chain, we're going to select here our deltas. Of course, I got plenty of things in my channel that I explain to you guys how to pick your strike price. Going to watch those videos, guys, because very, very crucial. And the 5 things you need to take in consideration before you picking your strike price. But in this case here, just to make things simple, let's say, for example, we're gonna choose here a delta of it's not showing the deltas here, but let's say 219. The stock right now is 219, as you guys can see, the IWM. Let's go here, for example, 1 standard deviation, okay, around this level here, which is gonna give us a delta of roughly 16. So in this case, if we were to open this trade here, we're gonna click here to get the mid price of 186. We multiply this thing here by 100, as you guys can see, maximum PNL 186. We're gonna sell here one cash secure put or naked put option for 747 DTE. This will be our maximum loss. Why? Because $219. Why now? Our strike price is 197. We are going to suffer this maximum loss here if this thing goes down to 0, which ain't gonna happen anyway, okay? And of course, this is the amount of money we need to have in our account to trade the naked put option. In this case, this is what the broker requires us to open the trade. But don't forget, especially for the newbies, guys, this is when you press the trigger, this thing here can double, this thing here can triple. You need to know how to do your portfolio, the whole portfolio. Trade in relation to the whole portfolio and not just in relation to, let's say, one trade. It doesn't work like that, okay? And what I mean about portfolio, guys, is like this. Let's say, for example, you open this trade here and you say, Lab, you know what? My maximum loss is 20,000. I've got a $1 million account. So basically, what you're saying to you is, I can put here, let's say, for example, I don't know, 50 trades with the maximum loss of 20. It's gonna get what? $2 million. No, it doesn't work like that, because this 20,000 here, guys, which it is this buying power, this thing here can jump crazily. Because let's say, for example, your maximum loss is 20. Let's call this thing 20. So if you have 50 trades, your maximum loss, it's $1 million. Then you think, I can open as many as I can. But don't forget, these $2,000, which is the buying power for this maximum loss, for this trade, this thing can go down, can go up to 10K if the stock market drop. So basically, you cannot open 50 trades of a maximum loss of $20,000. You can't. Because this is going to expand. You need to pay attention on your buying power requirement for your portfolio in general. And keep a track on that. How much do I have now? 30%. Guys, if that triples or if that doubles, whatever it is, it goes to 90%. That's how you track your portfolio. Don't get fooled by this number here for this buying power. Because this thing here can expand a lot. This is just when you open the trade. Because if a massive sell-off, you need to keep an eye on. You're going from 30% margin requirement to 35, to 40, to 50, to 60. You must do something. Close some trades, open some trades, buy some long position, buy some long spreads, buy some hedge. Do something else, because this thing can expand a lot. And that's the only reason naked put option sellers and cash secure put option sellers lose money. Because they take this in consideration when they open the trade. And then something happened like 2018, 2019, 2020. 2022 is not bad because it was a bear market. And there's a lot of time you can do things about it. Bear markets is just easy. It takes the whole year for the market to drop. But these 3 things here, guys, is a matter of 3 months. So make sure you keep an eye on or keep track of your whole portfolio requirements when it comes to margin requirement. In other words, your buying power, okay? But, guys, in a nutshell, that's what the naked put option is. Very, very simple. If you know what you're doing, it can be one of the best way to, let's say, get income. And for those of you that have a 9-to-5 jobs, is the best thing you can do. Okay? Again, with the proper risk management, because you can set and forget. You pretty much can collect income on a weekly, monthly, or quarterly, whatever how long your DT is going to be. And that's what I'm doing. And I'm going to show it to you guys very soon. A very small account that I'm showing everyone, because I got a lot of people in my trading group that has a $3,000 account. $5,000 account, $10,000 account, and I'm gonna get here, let's say 30% of this 3,000. I'm already up 10%. But that's not much, guys. The strategy that I'm using to get 10% out of 3K, which it is $300, is the same thing that I use on $1 million. So now I won't be up $300. I'll be up how much for $1 million account? 10%. You guys make the math. Okay, I'll be up, guys, $100,000. Did you see? The number here changed, which is the dollar value, but the percentage is still the same. So I'm gonna show you guys how to get a good income from your trading account. But my account is only $3,000. Keep your 9 to 5. Keep pumping your trading account every single month, every single week with extra income. That's the best thing to do. Do not leave your 9 to 5. Eventually, if you have a large trading account, you're going to be able to trade full time. But in the beginning, guys, don't get fooled for this. 9 to 5 is not a scam. Trading, investing, and with your 9 to 5 to pump your account is the best thing anyone can do when it comes to investing, especially long term, like I do myself. Okay, guys, just went a little bit of the tangent here, but you guys get the point. What it is: naked put option / cash secure put option. I hope I have added some value to you guys. And don't forget, if you found some value, subscribe to the channel, leave your comments, smash the like button, and share this video to all your friends. If you have any question, guys, don't hesitate. Join our Discord group, and I'll be very happy to have a one-to-one to all of you. All the best, stay safe, and happy investing.